the ability to refinance real estate and then roll that over tax-free into a new project, ideally that would be possible with Bitcoin also. So you, for example, let's say you are a real estate investment company, a real estate investment business. I think you would do well refinancing your existing assets and converting that capital into Bitcoin. If you can do it tax-free, that's even better. In Germany, you actually can, because if you hold Bitcoin for longer than a year, the gains are tax-free. And because I believe Bitcoin should not be sold anyway, if you just hold it long term, there's no taxable event. The question is, if you start, trading it, and if you do options, then it's a commercial activity in Germany, and that commercial activity would change one fact, and the fact is the following: if you hold real estate in Germany, after 10 years you can sell it tax-free, but you can only do so if it's not deemed a commercial activity. If you just hold the asset, if it's simple wealth management or holding of an asset. But if you start buying Bitcoin with the rental income and then you start trading it or selling it and then buying it back, it will be deemed a commercial activity. So you just need to hold it. But you do it, I think, with real estate anyway. So it's something that naturally should be understood by real estate investors. It's an asset to be held, ideally forever. And to also comment on what you said, that sometimes, working in the world of real estate, if you're also into Bitcoin, you think to yourself, why I don't just invest any penny into Bitcoin? And I think it's a good point, because saving in Bitcoin is much easier. It takes less effort than investing into real estate. And the CAGR, so the compound annual growth rate of Bitcoin, is actually larger than the average return of real estate, even if you calculate that there's leverage involved. Because let's say you have a 5% return in real estate, and let's say you have a leverage of 5 or 6, your return is actually 25 to 30%. And then, like you said, if you do it with money that was given to you and you invest that capital, it's not even your own capital. So it's almost like you're making a killing without putting in any money. But once you understand that this dynamic itself is actually part of the fiat system, that's the Cantillon effect, that over time causes boom and bust cycles because so much capital is funneled into real estate that it can never reach its realistic price. So there's a distorted price signal within the real estate market. And over time, because real estate is then sold in a secondary market, or the mortgages are sold on the secondary market. And in 2008, we really saw where you had assets that were overpriced, and then the mortgages were bundled and were sold on the secondary market and even then resold. And that can create systematic risk. So I think if you do real estate, look to put in some of your own equity and also use it to buy Bitcoin. Always own the assets that you're involved with. That's at least my opinion. I mean, there are different opinions. It's just a personal opinion of mine also as a Bitcoiner. I started to see also the fallacies of the industry, not criticizing anything because I'm in the industry still myself. It's just some self-reflection that I'm going through. And I do believe that the speculation that is happening in real estate, that will move over to Bitcoin, and Bitcoin can be saved much easier, but real estate will always continue to be an interesting business model. And it's also totally fine to conduct business with money that you obtain through credit. So if you're a Bitcoin purist and you dislike real estate because it's built on leverage, I personally believe in a fiat world where money loses value so rapidly, you actually need to obtain credit to conduct a business, because otherwise you have to risk all your savings. And savings are basically a hedge against bad decisions in the future. So it's very important to have savings. So that's why I can live. Some people actually ask me sometimes, Leon, what do you think? You work in a world of real estate. You're also a Bitcoiner. How can you combine these two asset classes? And I think we are all on our individual journeys. And through Bitcoin, we sometimes also understand flaws of the existing system. But I think it's important that we work on solutions where we combine and help the systems to be intertwined, because otherwise we'll just experience a huge crash. And because real estate is such an important collateral in the financial system, I think it's important that real estate owners start to own Bitcoin, because it's also a hedge against any systematic risk in the financial system that they are exposed to by owning Bitcoin, which as an asset class has become such important collateral in the financial system. So if you own real estate, I think you should really look at it as a Bitcoin mine. What I mean with that is now you own an asset that allows you to acquire Bitcoin potentially through leverage on a large scale. So that's a very big chance.
Yeah, I couldn't agree more. I think it's, and you made a great point too. It's important to differentiate in a way. There's so many ways to do real estate, and I would imagine the average person, at least here in America, like you said, they're getting a mortgage on a house, and they think of that as real estate. It's just the average person, right? And that's what they're doing here in America, at least. And we're kind of, Leon and I are kind of talking to separate things in a way. From what I'm sure the average person is thinking, investment, the side of things, is where you're raising money. Technically you're raising money from a mortgage lender here in America just to buy your own home. And to your point, Leon, I think that's, or even if you're buying a single family rental house and you're getting a mortgage and you're putting 20% down. And like you said, Bitcoin beats those CAGRs, those compound annual growth rates, hand over fist. Now, when you start introducing higher leverage, say you're raising all the money and then you're going in and rehabbing the whole place and then refinancing and pulling out all the money that was invested, maybe more. You might have put a 500 grand in and maybe we refinanced it for 600 grand and you pulled out even more than the property, than you put into the property. So again, those are infinite returns where you can use these vehicles, and it's not for everybody. And that's where like the big pools of capital are going to be doing things like that potentially. And then the average person is going to be doing something differently too. So I know I wanted to try to clarify just for the average person, because I'm sure what you and I are talking about at times kind of seems like, okay, where are we and where are they going as we go down the rabbit hole here and there. But so I wanted to mention that. And then I was also thinking of, we talked a little bit about just earnings. I'd love for you to talk about the business cycle just a little bit more. And you touched on it a little bit already, but one of the big objections obviously is Bitcoin doesn't produce anything, right? There's no earnings, there's no cash flow. Have you thought about that in terms of real estate? Is it just extending out your time horizon, a few more years? Are there ways that you guys have thought of to start generating, a return on it, I guess, so to speak? I mean, are there ways that you've kind of gone about thinking, hey, these are some creative ways we can do it, a la the Sailor playbook and what's happening there? Obviously, like you said, I think the big innovation is you have to start infusing. The market in general saw Bitcoin for 15 years as, hey, it's a separate asset class. We don't really know what it is. Is it property? Is it money? We have no idea. And now we're starting to see the first inning basically of, oh, this is something that's going to be infused and disrupt all the models, disrupt all the legacy stuff, but it's also being infused with the legacy stuff at the same time as it's kind of breaking all of it. So have you looked into or thought of just different creative ways to satisfy or quench the thirst, I guess, of some people who are, it doesn't produce earnings, it doesn't produce cash flow? Or is it just the fact that, hey, we're intertwining it with real estate that produces a return? I mean, I guess, how have you been looking at that recently?
Yeah, so I think the reason why most people want cash flow is because they're used to money losing value. So they want cash flow or yearly return to
I love
outperform
that.
inflation. And
Yeah.
then a lot of the assets we own, they're bought on debt. So you want cash flow to pay back the debt, right? But if you really think about it, a good savings tool doesn't need any cash flow. So Bitcoin's year over year return, basically its increase in purchasing power, that's the cash flow on Bitcoin. So using it as an analogy, meaning of course it's not cash flow, but that's the return you get. It's the scarcest asset in the universe known to mankind, and it compounds over the years in purchasing power because we are being more productive and there's more fiat currency produced that is looking for a scarce asset, right? So you don't need cash flow on Bitcoin. It's very difficult for real estate investors to understand that. And how I usually explain it is you should think about it like this: real estate has become so valuable not because of its cash flow, but because it is used as money. It is actually one, of the most used forms of money of human civilization since 1971, because what happened in 1971 was that Richard Nixon announced that the US would end the convertibility of the dollar into gold at a fixed rate. And that caused massive monetary debasement worldwide. And you can really look at the chart of the value of real estate worldwide, and you can see from that point onwards, real estate almost moves online with the increase in the monetary supply, especially in the US. So in the US, we looked at the CAGR, the compound annual growth rate for M2, the money supply, and that was around 6.8%, and commercial real estate was 4.4%, and residential 5.7%. So you can see that real estate follows the money supplies because it is used as a store of value. It is used as money. Money should be a store of value. Fiat money is not, because it's being debased, right? So if you understand that real estate has become so valuable, not because of its cash flow, but because it is used as money, you understand that the cash flow is only important because debt is obtained to build and purchase real estate, right? So, but it doesn't mean it's a good store of value. And then the argument of a real estate developer would be, okay, well, but I can't buy Bitcoin on leverage, right? And I say, that's true. If you're a real estate professional, like you said, that's different from being an average investor. With an average investor, I mean somebody that wants to save, because Bitcoin is not an investment, it's money that can be saved, where real estate is an investment. It's also a very important distinction to make. So it's much easier to just save in Bitcoin rather than having to invest in real estate if you just want to build wealth, save money. If you are in a real estate business anyway, because you like the building environment, you think it's important to provide housing to the market, you enjoy constructing commercial or residential properties, then I simply suggest do that, but amplify your business model by including Bitcoin in financing, using it to save the purchasing power of your cash flow and refinance your property. Because then think about that. If you buy Bitcoin on leverage, those returns, they are really crazy. And that's what Saylor is basically showing to the world. And if you own real estate, if you own an income producing asset that's fully leased, right, that is great collateral to obtain credit to buy Bitcoin, because Bitcoin does not produce cash flow. So you can't, right? You can't use it to pay back debt. You can sell it, but you don't want to sell it. So you use real estate, you buy Bitcoin, the volatility becomes secondary because you can pay back the debt with the cash flow of the property. So now you combine both asset classes, you do it from the beginning, you do it while managing the asset, and then as time continues, you increase your BTC position through leverage. And by doing that, the business will become even more interesting, and you can compete actually also with other market participants much, much better.
If you like that clip, then you definitely gotta check out this next spicy clip. I think you're really gonna like it. Come on, check it out. But if you want the full version, the full interview, check that out over here. Come on, do it. I'll see you in there.